Hey guys, Brad Niccum Nest Mortgage Group. I had some information to do a Monday update. I haven't done one in a while because I really haven't felt like there's been a lot of changes in the marketplace. But today there's some news to talk about. So I hope everybody's enjoying spring. I know I am. I'm really excited about it warming up and getting nice out here. So first thing is mortgage rates. Rates are expected to drop in 2025 and 2006. Fannie Mae just released their forecast March 2025, and they project rates will fall to 6.3 by the end of 25 and 6.2 by the end of 26. That's actually revised down about 0.3% for each year. The lower rate outlook is led by a slight upgrade in existing home sale projection for 2025. Overall, home sales are expected to remain modest. Real GDP growth is expected to slow slightly at 1.7% in 25 and 2.1% in 26 due to a weaker economic data and the evolving trade policy. Fannie Mae chief economist Mark Palm noted that lower rates should give home sales a minor boost, especially for buyers waiting for those favorable times. Another piece I want to talk about a little bit is who is actually lending the money out there. A lot of people think that, oh, I'm getting a VA loan, so VA is lending the money. Or I'm getting an FHA loan, so FHA is lending the money. Or the same with Fannie Mae and Freddie Mac. None of those people issue any type of loans. What they do is they insure the loans. They back the loan. So as my bank writes a VA loan, you are getting a loan from me, from my company. And that loan is now going to be backed by VA. And they're only going to get involved if you go into foreclosure. They're going to pay me how much is owed on the house, so they make me solvent, and then they're going to go foreclose on the house. And the same works with Fannie Mae and Freddie Mac. They insure loans up to 96.5% of the purchase price, and Fannie Mae and Freddie Mac insure those loans up to 80%. And that is why you have private mortgage insurance if you put down less than 20%. Fannie Mae is going to insure me up to 80% of the loan amount, and if you only put down 5%, the PMI, the private mortgage company, is then going to insure me for that other 15%. So it's important to know, especially when you're talking about VA loans, don't get caught up talking to a lender that tells you they're the VA. The VA endorses mortgage companies to write VA loans, just like Fannie Mae, Freddie Mac, and FHA. So that's a little explanation of how that works. There is one other major change, and that is a change that started on March 26th for FHA loans. We are no longer allowed to do a loan for a non-permanent resident alien with an EAD card. So that option for somebody who is DACA or has came into the country and got a social security number and got a work ID number, but they don't have a green card or a permanent resident alien card, there's no longer an FHA option for those buyers. So it is going to change up the market a little bit. That rule started March 26th of this year. So as you're talking to clients and you're going through that, are you a citizen or what is your legal status for being here? We have to make sure that it's not just an EAD card. There are several different visa types that work. And then, of course, anybody who has a permanent resident alien card. So if you have questions about that or you have a customer that you wonder if they fall into that category, please reach out to me anytime. I know this is a little bit longer video than normal, but thanks for watching. We are still running great underwriting times, 24 to 48 hours for underwriting, 24 hours for condition clearing, closing all of our loan types in about 25 days. So things are going really smooth there. Again, if you have somebody that needs to get pre-approved or if you're a buyer looking to get pre-approved, I answer my phone 7 days a week, holidays included. So if you have a question, do not hesitate to pick up the phone and give me a call. And hopefully we can work together in the future. Again, thanks for tuning in. Have a great day.